Well, I request you to hold on, Prakash, and maybe you could listen to this conversation we're going to have with Affle India. Remember, the past quarter is a little bit disappointing as it came in a little lower than what the street was working with. The revenue growth has slowed down to around 11%. With the exports contribute, close to around 65% of their business, that's been muted for the past few quarters. To understand what went on in the quarter, what's the way ahead, we're joined by Mr. Anuj Khanna Soham, the founder, chairman and CEO of the company. Hi Anuj, good morning. Always good speaking to you. Well, you're still growing, but at a slower clip. The growth was close to around 11% odd. We are used to seeing the 25-30% odd, and that's what you have aimed for as well. Could you tell us, why did the growth slow down? Do you expect to get back to the mid-20s in the coming quarter? And also, exports, they haven't really moved. It's been in that vicinity of around 240, 250 crores for the last 3 quarters or so. Is there some pricing pressure? Are you observing that, some of the clients are pulling back on the spends?
Hi, good morning. Well, first of all, I think the results have to be seen in the context of not just one quarter, but let's say if you see it for this financial year, for the 9-month basis, the revenue, EBITDA and PAT year on year has been well over 40%. And I think that is quite a good way to enter into 2023. So 2022 overall as a year was a tough year. The 3 quarters, when you look at it together, I think Affle has delivered great growth overall. When we look at this, the immediate last quarter, Q3, we've got to see the numbers. Let's start with India first, which is our biggest market, which is approximately 35% of our revenue. There we have grown well around 23% plus in terms of year-on-year basis. And I think that's in line with what we have always guided towards. When we look at a broader set of our business, which is global emerging markets, when you talk about exports beyond India, 80% of our total business comes from, let's say, global emerging markets. And even there, the year-on-year growth trend on revenue is about 23%, right? Then we look at the total business. You say, okay, what's happening in developed markets? Clearly, there are headwinds. Clearly, there are macroeconomic factors. US and Europe markets have been impacted, and we've guided towards that in the last several quarters discourse as well, that there is headwinds and pressure in developed markets. And in emerging markets, anchored out of India, we are consistently delivering resilient growth, even with respect to the headwinds that are clearly there, even in some of the emerging markets. Now, while the overall growth, numbers that you talked about was about 11% year on year, but when we look at the total emerging markets growth, India as well as global markets, exports included, that's about 23%. So it's a pretty resilient number. So the outlook for 23 remains also very favorable, because we are hoping that in developed markets, we have actually already found some key verticals where we can accelerate some more growth into 2023. And, the emerging markets, which is 80% of the business, is already quite resilient at 23% growth, even in the last quarter.
Sure, got that. But I'm sure you'll agree with me that, there is this whole funding winter that's expected to flow through for the rest of the year because of, what's happening with new age startups, with the kind of layoffs that we're seeing. And some of them are your key clients as well. Do you foresee a slowdown in client spending through the course of the year? If yes, what is the kind of average growth that you see that's doable for the rest for FY24?
So I think even for this particular case, we have been qualitatively providing deeper insights into what kind of clients are we serving. And if you look at our earnings presentation, we have actually given 3 case studies of our customers. I think the first one is in e-commerce, like, the super apps, but they are owned by, large conglomerates. And, I think there's no funding constraint as such on that front. The second case study that we gave is for financial and banking. Not fintech or crypto, but are we talking about like banks, which are providing traditional, baseline financial inclusion services and so on. And I think that's, again, a case study of Indonesia for one of our bank customers there, which, again, is a resilient category. You're not expecting those guys to change their behavior based on external funding as such. And the third case study that we shared is about gaming, which is a global gaming company. Now, gaming, we believe, is a resilient vertical. Even in recessionary times, we think that gaming would continue to be resilient. And it's one of the verticals where we are actually under-calibrated at the moment. So the addressable market is large. It is a resilient vertical. And we think we'll find more growth in that vertical as we go along. So I think guidance going forward would continue to be that, let's look at 2 things. One, India will continue to grow north of 20%. Global emerging markets will continue to grow north of 20%. And while we are looking at finding faster, accelerated, more efficient growth in developed markets as well, one thing which is very clear is that Affle is grounded in bottom line sensibilities. Our margins, our profits have really expanded even in the 9 months that we've reported so far. The last quarter itself, our EBITDA is over 21%, our PAT is 17+%. And that has shown that, okay, while we are showing some challenges of headwinds only in the developed markets, but we are driving more efficiencies in our business across the board, delivering higher growth and profitability. And I think that is super important, right? So our goal is that next year, even if the revenue growth is, let's say, shy of 25%, can the profit and the EBITDA growth continue to be, in the 25% range? And I think that's what the management is working towards.
Okay, all right, Anuj, very quickly before we let you go, what is the margin outlook? That's improved, which is heartening. So what's the rough band you want to guide us to? And also last time you were talking about some acquisition where you'll do a share swap agreement, right? By when do we hear about this, the finalization?
Well, we are still in, evaluation phase because, as we said, we took certain preparatory steps as we were entering into 2023. We think that given what's happening in the markets, we'll find attractive inorganic growth opportunities within this year. So we've taken certain, approval that we can anchor our negotiations appropriately. I think I can't give you any timing necessarily, but what I can say is that it's a good time to be out in the market with the kind of strong balance sheet we have, and we will utilize the right currency. We still have a lot of cash, so we will first try to use that, and in the right deal structure, use some amount of equity sparingly and carefully in order to do the right deal structure. But overall, I think margins should continue to be, in the similar trends that we are seeing as we continue to grow. We will be bottom line sensible. We will be looking for margin expansion, or at least defending our margin position as we go through from a full year FY 2024 perspective, and certainly for the last quarter of this financial year.
All right, we'll leave it at that, Anuj. Thanks a lot for joining in and all the best. It is a challenging year, definitely, especially from some of your clients, but I take it that you're managing it well. Let's take a quick break.